we'll talk about this because I thought it was interesting in your paper, and I think there was a previous paper you did a few years back that kind of talked about gold from a historical basis, meaning the idea of, okay, how much of protection or a hedge or whatever you will does it provide over certain periods of time? And it was like almost like you had to go back hundreds or maybe even thousands of years, you can correct me if I'm wrong, to really sort of chart that outperformance. Explain that.
Yeah, so in this paper, we did this fascinating experiment where we found out what the wage of Roman centurions were. So the Romans had very detailed records. So we actually got the weight in gold of their wage and then compared that to the wage of an army captain in the US and found that it was pretty similar. And what that means is that gold's price in terms of a real, so inflation-adjusted gold is relatively constant through time. So it does provide an inflation hedge, but this is key. I said that it's as volatile as the S&P 500. So to get that hedging ability, the horizon is very long. So it's not 5 years, it's not 10 years, it's centuries or even millennia. So again, we need to be very careful here because of the volatility of gold can lead to a situation where it fails to provide that hedge.
So Cam, how do you know how much of a premium you want from gold then, or how do you even know what a premium is? At one point, it might have been heresy to compare Bitcoin and gold, but just in terms of the valuation question, you could ask the same question. How do you value an ounce of gold or a Bitcoin?
Yeah, so in my research with CloudHerb, we actually draw the analogy of the real price of gold. So the idea, if we inflation adjust gold, and we do show that gold holds its value through time. So the real return on gold is zero, which means it holds its value. So it moves with inflation over very long periods of time. But again, if you think about that, we draw the analogy to a price-earnings ratio for a stock. So if the price-earnings ratio is really high, then when you look at future returns, those returns are often low. And we do the same thing with the inflation-adjusted price of gold. So we look at the inflation-adjusted price and look at the real return on gold over the next 10 years. And historically, that has been low or negative.